We're back. Options bulls buying protection in the S&P 500 ETF today. The SPY ETF is up nearly 4% year to date. Pete Najarian joining us now from Minneapolis. Tell us about it, Pete.
Yeah, Scott, I mean, we talk about this all the time on the show, right? We talk about the volatility index and where it's trading, and people are always asking me, well, how do you trade through that read of the volatility index?
Making money in the stock market using options is the strategy that the banks and the big guys have been doing for so long. And now with new apps out here, you too as a retail investor can take advantage of this great income strategy. And we're going to talk about it right now in this video. If you're finding us, yes, me and the baby, for the first time, please subscribe to this channel. On this channel, you not only get stock information, you get trending news stories, you get TV show reviews, movie reviews, and we do Marvel. And occasionally I put up vlogs about me and the baby, but more importantly, find your reason why you want to be financially successful. One of my reasons why is this little twin of mine right here, my daughter. So I'm going to jump on the computer. I'm going to walk you through a complete guide on how to sell puts and make good income in the stock market. Let's jump on the computer right now in my Robinhood account. And by the way, be sure to click the link in the video description for my Robinhood account so that you can get a free stock. I'll get a free stock and we can build this wealth team as a unit. We're in my Robinhood account, ladies and gentlemen. And mind you, I'm not a financial advisor, so keep that in mind. I'm showing you guys this just purely out of, I guess, somewhat entertainment value and for you to make informed decisions. There are so many beginners out here trying to get involved with taking care of their financial future. And I wanted to show you guys how to build your portfolio, same way I built mine. So when you're thinking about selling a put, there's a couple of numbers and a couple of pieces of data you need to look at. Number one, implied volatility, and you need to make sure you have enough money to cover said stock for 100 shares. So basically one contract equals 100 shares. So let's go ahead and take a look at one I'm going to do live right now, Virgin Galactic, if all the numbers add up. Okay, so here's Virgin Galactic. And if you're with Robinhood, make sure that you have the settings turned on so that you can do options. I've heard people say they couldn't get to this little bar right here that says trade. You have to have it turned on. And if you're someone who's really going to take this seriously, consider Robinhood Gold. It costs $5 a month, and it allows you to, as your money is being transferred from the bank to Robinhood, they'll go ahead and allow you to use those funds immediately so that you don't have to have that stupid 2 to 3 day wait. So first thing you do if you're new in this thing, I want you guys to pick quality companies. And picking quality companies means you just need to do a couple of quick minutes of looking at something. Because at the end of the day, if you wind up getting stuck with the stock, you want it to be something that you know is quality and will go back up. And I'll explain that as we walk through. So first thing you do, check the 5-year history, people. Now, they haven't been in business 5 years. They've been in business for 2, but you're checking your 5-year history to make sure that in those 5 years you've seen some growth, and they have it. Check the 1-year history. You see that 149% more growth. Check the 3-year, still looking good. Check the last month, still looking good. Check a week, looks good. They're green from every point. This is a pretty decent stock, and you can take a look at it. And in order to do a sell a put on it, you click trade, come up here to the top, click sell, put, and then the next thing you would click is the expiration date. So ladies and gentlemen, you're really just starting from the top. You're going to click sell, click put, and then check the expiration date. Now, when you're doing these and you're trying to figure out a good expiration date, I like to do these within a week. Never if you're new, try to do the stocks that do monthly. You don't want to do that. You don't want your money dangling out there that long. So they trade pretty much weekly. All right, now you come down here and you're trying to pick a strike price. Now, how do you do that? The lower you go on the strike price, the less premium. This is your premium. This is what they're going to pay you immediately. As soon as you decide to make this happen, they're going to pay you this right here. And remember, it times 100. So this would be times 100. So it'd be $202. But also remember, the strike price is times 100. So 100 times 39 is about $33,900. But I wouldn't pick this strike price. And if you click on this section right here, you can get a little bit more data. And the two most important things I look for when you click this on is implied volatility. You want to see that being no higher than 75. And then this number over here, the delta. If you're someone who needs to get their money back at the end of the week, so on expiration date, January 29th, you put your money out there and you want this stock to come, you want the money to come back to you because the stock is not going to drop below your strike price. Right now, the share of this stock is $40. The strike price is $39.50. You want to make sure that this delta is 0.39 or less. And that way it would take a huge event in the world to cause this stock to drop. So in two important numbers to look at, implied volatility and delta. And this implied volatility is just way too high for me. And for those of you who are professionals, you know what IV Crush stands for. Newbies, you'll start to learn. Basically, your implied volatility is how much traffic is going in and out of the stock, how many people are buying or selling the stock. And when this number is real high, there's always a chance that on an instant it's going to drop, and that could drop the strike price. Could drop the share price of the stock. So no on that one. We're not going to do that one. Let's look at another example. Let's try NEO. Let's see what they're trading at. Let's see what their numbers are, okay? So, and this one looks pretty decent to me. You come in here, check the 5-year. They haven't been around 5 years. They've been around for 3. And you see they've had growth in those 3. Growth in the last year, a lot of growth. Growth in the last 3 months. And then in the last month, still more growth. So looks good to me. Let's check them out. You come up here, sell, put, and you want this to be within a week, and it is. This is the week of January 26th, and Friday would be the 29th. And then you come down in here and you check the implied volatilities, and you would check the delta. Okay, that's still a little too high for me. I don't want to mess with 94. And that delta is a little too high. So you could always come down. The lower you go on your strike price, the better the delta is going to look. So as you can see, that's a 0.22. Remember I said 0.39 or lower. So let's see what this one is. This one is 0.26. Okay, so I'm going to just come back up to 57. And there you go. You could run with this one, but I wouldn't run with it because I'm not that fond of this implied volatility. But if you're someone who doesn't mind holding the stock, because if you got stuck with the stock, ladies and gentlemen, you could then turn around and sell calls against the stock. So that's why this particular strategy of selling puts is so powerful, because it gives you so many exit strategies. This is probably by far the most powerful strategy to make income in the stock market, as well as give you the most exit strategies. So I'm not going to use this one. All right, so let me go and find another one. And you can also come over here and you can make yourself lists. So let me get past all the stocks I own so that you guys can see where I keep lists. So I keep lists of different things I like. And as you can see, I've got cheap stocks, swing stocks. And then I go down here, we see this says high puts, high dollar puts. And then I've got a list from 200 to about $400 is what it would cost in a put in terms of the share price. So let me click in here. So I'm in my list of stocks that range between $200 and $400. So I can do a put. And let's see what we got in here that we can use today that I like. Let's see. I've used stamps.com before, but ladies and gentlemen, I got stuck with it and I had to sell puts against it for about 3 months, which is fine because by the end of those 3 months, I had made about $4,000 selling calls, against it, even though I got stuck with it. So I like CRISPR Therapeutics. Genetic testing is something that's big in the economy right now because of coronavirus. And the stock is actually down today, which is another good thing. So that means it's going to have room to grow the rest of the week. Still check your numbers. 5 years ago, it had growth. A year ago, it had growth. 3 months ago, it had growth. A month ago, it lost about $3, which is fine. I'm fine with that. You just want to make sure that 5 year, 1 year, and 3 month is great. So you come over here, you click trade. You're going to sell a put, and you want it to end within the week. When you're selling puts, you want these things to end within the week. All right. And if you come to this one, your delta is going to be high. I can just tell you that right now. Anything that's just below the share price is going to have a high delta if you're someone who needs to get their money back by the end of the week. All right. I don't necessarily have to have my money back by the end of the week. I do believe in CRISPR therapeutics, but I'm going to just come on down here anyway and see where this delta is at. This is a 23 delta, and that implied volatility is closer to what I like. Like I said, I usually don't like to go above 75, but depending upon the company and the quality of the company, I will. And so I'm not going to use that particular one. So let me come down here. That delta is 0.29. I'll come back up again. This delta is 0.37. So, hey, here we go. Well, that's a little too high, but I'm going to use this one in anyway. I'm going to still use it because I believe the company is going to go up. And so if you wanted to sell a put, you will click the plus button. And remember, you have to have 100 times your strike price. So that's going to be what, 17 grand? And they're going to pay me $475 immediately. So then I would click continue, and you would click 1 because you're getting 1 contract. And this limit price, you don't even have to worry about that. Just use what Robinhood sets. Basically, in other apps, the mark is the price between 410 and 580. That would be called the mark. Or the bid ask, the middle price would be that. So you would just come in here and let Robinhood pre-populate that for you and run with it. So click review. And while it's doing that, ladies and gentlemen, I'm going to just be honest with you. Sometimes Robinhood doesn't get your put or call done that day. So just be mindful. You need to get an email saying that it's executed. All right. So you see this right here, the minimum credit. They're paying me this right now, $460. And the collateral I have to have in my account is $17,500. The limit price is already there preset for you. So you just click continue. And then you click submit, and it just went back up to $500. So I'll take that. All right. And then you're done. That's it. And I would tell you all to make you a ledger and keep up with this stuff. Write down the implied volatility, write down what you have for your deltas. And by Friday at midnight, as long as the share of this stock doesn't drop below your share price, your strike price, which this has already dropped below my strike price, you will get all your collateral back, and you get to keep this $500 credit. Now, what happens if you get stuck with the stock? Okay, let's say you do get stuck with the stock. Monday, you wake up, it dropped below, the share price dropped below your strike price. All you would do at that point, ladies and gentlemen, is come here, click sell a call. And then you would just do the same thing. You would bet above your share price. So I got it for 175. That's my strike price. I would just bet this thing up to about 185, which would be this number right here. And then you would go through the same process we just went through to sell the put. Only difference is you're selling a call, which is you're putting up your 100 shares of stock that you got stuck with to make a weekly income. And by the end of this week, if the price went above that share price, they would just call away your stocks. You get all that money back, plus you get to keep the credit that they're going to pay you up front. So that's why people tend to call this thing the wheel strategy of investing, selling puts. And then if you get stuck with the shares, you sell a call. So ladies and gentlemen, that is pretty much it. That's a complete walkthrough on selling puts. I will do another video on how to do calls. Buying calls, buying puts, and why and when would you do them. Just stick with the channel and we'll make that happen for you. So there you have it, ladies and gentlemen, a complete walkthrough on selling puts and how you can make some income selling puts in this marketplace nowadays where you can't get any interest on a savings account that beats what you can earn selling puts week to week. So if you have any questions, just shoot me a comment. You can find me on Instagram. You can come and join my Facebook group over at Life Games. And that's going to do it for this video. Don't forget to like the video, comment, subscribe. Be sure to let me know what you guys are up to in the stock market. Join me as I'm continuing to grow my account and trying to show you all how you can make the same kind of money that the insurance companies are making, banks are making, and everybody who's an institutional investor. Till that next Sex is Hell video, I'll see you.